Talk about the partnership that you guys have struck and how long you guys have been considering this. Who approached who first?
Well, today's a great day for investors. They're about to get a huge upgrade whenever they access the capital markets and trade and invest. GTS has announced that we're acquiring both the ETF market making business and client service business and the wholesale market making business of Cantor Fitzgerald. And with that, it allows GTS to help fulfill our mission, which is to use technology to bring innovation and a new level of client service to the markets. And what that'll do is help investors save money whenever they trade or invest, and it'll help increase investor confidence. So we're really happy about that.
You didn't answer the question, though, of who approached who first.
GTS is down at the New York Stock Exchange. We're the largest market maker. So for us, we brought our technology for the public companies we serve and their employees, and it's worked out really well. And we've been looking for ways that we can broaden that offering and reach investors of all kinds, whether they're large or small institutional investors or retail investors. And it's hard to not be aware of Reggie and his unbelievable team that has really been pioneers in the industry. And we've had a relationship with them, and we're thrilled that we were able to put this together.
Well, Reggie, how do you plan to leverage the technology that's on hand at GTS? And what kind of benefits will it result in the near term and in the longer term?
Well, I see this as building upon our long legacy of serving clients and helping solve problems. And now we're going to deploy technology solutions to further engage clients to meet their needs.
What does that mean? Faster turnaround time, cheaper?
I mean,
ETFs
just
trading?
Some innovation in the marketplace, a little more competition.
What does innovation mean?
Well, look at ETFs. You look at overall, 8% of U.S. households have use of an ETF. There's a lot of growth still in the portfolios. ETF industry is still young in comparative terms. I think there's a lot of opportunity to develop new solutions, take our business acumen, help clients, and succeed in areas that are yet to be addressed.
What does this mean for you in terms of competition, Ari? How specifically does it allow you to better compete against names like Virtu and Citadel?
Well, it's one thing to remember is that clients came to us and wanted this. We were responding to a client need.
How long have they been talking to you about this?
For a decent period of time. They've been talking to Reggie and his team for a long time. We responded to a client demand. They wanted a new level of competition. They wanted a new level of innovation. And we're thrilled to deliver, and we're happy to bring Reggie and his team over and start solving some problems, lowering costs for investors and increasing investor confidence.
You just mentioned there, Reggie, about areas yet to be addressed.
That's correct.
Where else is going to be addressed there? Where do you see low-hanging fruit right now?
Well, look, in fixed income, there's a lot of innovation, particularly that market structure is yet to evolve. And you see what ETFs have done, brought equity rules inside of fixed income and brought price transparency and tighter spreads. I think there's a lot of value there particularly. And there's pockets outside the United States that have been slow to adopt ETFs. And I think if you look at the regulatory framework around the globe, there's only 5 market centers that have adopted rules for ETFs. There's a whole lot of more growth to be had, a whole lot of more opportunity to deliver our values into the marketplace. And look, I'm an ETF evangelist, right? I believe that the entire mutual fund industry will adopt the ETF format at some particular time because of competition, prices are coming down, and it's very difficult to compete from an active standpoint. So you need to have an ETF model to deliver an active manager's IP delivered in the marketplace, and that's just natural growth.
Makes sense that Reggie would say this, Ari, but I wonder from where you sit, what are the biggest challenges to the continued adoption and trading of ETFs? What could be an obstacle there?
Well, I think a lot of it is about communication. A lot of it is about how they work and proliferation of why they're such a valuable investment tool. And Reggie's done such a great job. So we look forward to continuing that. But what's great about ETFs is that when you merge them with great technology in market making and pricing, like what GTS has, the advantages of ETFs are amplified because they become even more of an efficient vehicle. And that's part of the magic that Reggie and I are going to do.
And it also encompasses beating back myths that ETFs exacerbate volatility in markets like we've seen this month, in October.
Yeah, Reggie, talk about that, because do you feel that in a way ETFs have been a bit of the eye of the storm, people willing to blame passive for some of the outside moves that have happened in the last couple of weeks?
Look, ETFs have taken it on the chin from active managers looking to save their business model, and that's where the majority of that conversation is coming from. The marketplace will always find equilibrium, and you're talking about big moves. ETFs doesn't necessarily protect you from price changes. It just helps you transfer risk at a very efficient price using a transparent method. So this conversation around passives and common ownership and our public companies being disenfranchised by passive investing, Ari is the largest DMM on the New York Stock Exchange. The productivity of bringing clients to the marketplace with innovation and raising capital, that's GTS's framework and foundational principles. And we're just joining GTS to bring the ETF message and also how to engage retail households through the wholesaling business. There's 45 million households that use equities for investing. GTS, through our wholesaling business in combination with the ETF business, will be a leader in addressing solutions in that marketplace.
I want to ask you about October specifically. It was a very volatile month. Did you see any hiccups when it came to the trading and the clearing of ETFs, especially the more exotic ones, or did they behave exactly as they were designed to?
As designed, as described, as built, as delivered, no problems.
Nothing like February?
Absolutely not. Look, everyone's looking for some catalyst. Will the fixed income marketplace cause a run in the marketplace? Will some risk transfer anomaly cause an issue? The exchanges, the New York Stock Exchange, BATS, NASDAQ, have done a tremendous job of harmonizing their rules, fixing issues around rule structures that now put ETFs on the forefront of market structure.
I was just listening to a podcast of Barry Silbert, who is a digital coin investing, and he's really looking at eventually, he's built a lot of his funds and ways in which he manages money to look exactly like spider ETFs, because eventually he thinks there will be a Bitcoin ETF and he can quickly go into that market. Do you think there'll be one in the next year or so?
Entrepreneurs have great ideas, and people want to put their capital at risk for ideas around digital assets and Bitcoin. I applaud them personally. I don't think the framework is built yet. I think that there isn't mechanisms in the marketplace to allow for a safe clearing price in digital assets. So Bitcoin and the other digital tokens, I'm rooting for them. I think they're the new wave to engage households in capital formation. There's less public companies in the marketplace because of overregulation. And I think the token method is another way to bring in retail households to engage in capital formation.
So no Bitcoin ETF over the next year?
I'm on record by saying no. I'm on record saying no for a very long time. And I hope it doesn't come to the marketplace just yet, because we're not ready for it from a regulatory standpoint.